Class is now starting. All attendees are in listen-only mode.
Hello everyone, thanks for joining us today and welcome to the Specialist Trading Educational Presentation. Now today I'd like to talk to you about protecting your investment in this volatile market. If we look at a chart here at the spiders, that's the ETF that represents the S&P 500, we see here this past week that we've had a lot of changes. For example, just the beginning we started to kind of firmly go up and then all of a sudden we had this sharp drop. So just when you think that it's starting to go down, we start to firm up and it looks like we may be filling up this gap and going higher, but then all of a sudden we're making lower lows. So now you're convinced we're in a downtrend, and then the last 2 days, the first days of February, we go back straight up, right? This can really affect your personal trading regardless of what type of strategy or what type of method you're trading. For example, as we look at this chart here in Apple, here's a recent chart of Apple coming into the second week of January, just about 3 or so weeks ago. Now we see here that we're basically in a downtrend. So let's say that your strategy relies on breakouts. So you're waiting for price to break out above this downtrend line, and that's when you want to jump in and buy Apple. As you can see here, the very next day, lo and behold, we break out and close above. So that's your signal to buy. Whether you buy the stock or maybe you buy some calls, you're going to get in on the opening of the next day. So here it is the next day, and you buy, and you have a very nice profit at the end of the day. In fact, in the next 2 or 3 days, you have a really nice profit. But at this point, you're real excited. You think that it's going to go straight up, and you're really going to make a big killing. Maybe this is the next GME or maybe the next double B. So you're excited about being long, and then all of a sudden this happens. You lose everything. In fact, you're not only losing your profit, you're actually in the minus column now, because now it's much lower than where you entered into the trade. So in the time span of a week, you've had some nice gains and you've given them all back, and now you're losing. Well, here's what we're going to do today. I'm going to share with you a method that would have not had you buying right here. In fact, it would have generated a buy signal well in advance, way back here at the bottom of that sell-off. And then on top of that, it would have generated an exit level for you. In fact, a total of 4 altogether, giving you a chance to get out right up here and potentially capture 15 points in just a matter of a couple of weeks before all of a sudden the trend changed. So this is what I'm going to be sharing with you today, how to protect your profits in these volatile markets. Here's the good thing about all of this I'm going to be sharing with you today. Everything is one click away on our platform, the PTS Primo charting platform. This actually teaches you how to protect your investment. So this promises to be a great educational presentation today. Thank you once again for attending. My name is Steven Primo, President and Founder of Specialist Trading. If you're new to my webinars, we are all about educating you. That's our only goal here at Specialist Trading. We're not going to talk to you about what we think the market's going to do. We're not going to tell you what the best stock is to trade or the best time frame. Those are things that you must come up and answer yourself once you have the proper education. Now, the reason why most traders don't like to answer those things themselves and like to find out what everyone else is thinking is because they don't have the proper education. Therefore, they don't feel confident enough to make their own decisions. But in my 44 years of trading, the only traders I know who are still trading are the ones that make their own trading decisions. So that's why we really focus on educating you, so that even if you don't have enough experience, even if you don't have enough education, you'll be able to feel confident in what we teach you in the short time span, so that you can, for the first time, be in charge of your own trading destiny. This is our goal at Specialist Trading. You'll see that attention to detail and what we're trying to educate you today. Now, before we begin, as always, we're required by law to share this with you, so please take a moment to view our disclaimer. I'm going to show you a lot of performance results using a few edges today, but please remember that we can in no way guarantee that any of the results I'm about to share with you will be repeated in the future. Also, please remember that since we are an educational company, all examples are strictly for educational purposes only. Now, I know a lot of you, I've gotten emails and responses back that you love the webinars. Is there any way to get some more information, even on a daily basis? Well, yes, there is. You can follow us on Twitter. There's our handle right there if you'd like to get more information. I post different things on a daily basis. Sometimes I post signals our strategies have generated. Other times I post little bits of financial wisdom. But it's all educational. It's all ways to elevate your trading. So please feel free to follow us on Twitter. Okay, once again, my goal as you see here, is not to force feed you signals. It's not to tell you what the market's going to do, the way so many webinars tell you, or not to tell you what the perfect stock is, or what this stock's going to do, or what the perfect time frame is. Once again, those are all things you have to figure out on your own. My goal as an educator is just to point you in the right direction with tools, tips, methods, strategies that have shown high levels of consistency over the years. Now, when I first started trading some 44 years ago, I started my career on the floor of the Pacific Stock Exchange. I was on the floor for a total of 16 years, and 9 of those years I was a specialist. That's where we get the name specialist trading, and that's what the specialist edge is. It doesn't mean you're any more educated or you have a greater insight than anyone else. It means that you have gotten this certain type of mindset and how to trade, where it's based in simplicity and it's based in just education and making your own decisions. That's the specialist edge. That's the edge I teach to over, I guess, thousands and thousands of students in over 115 countries and in every state in the United States. So hopefully I can teach that edge to you by you becoming a student of mine. Okay. Now, this is an educational class today, so ask me as many questions as possible, but let's hold off to the very end to ask questions so that we don't have to stop for every slide. The only question I will answer is this being recorded? Yes, it is. So each and every one of you will get a link to this recording at the end, okay? All right, with that stated, let's begin today's presentation. All right, so we're going to be talking about how to protect your investment in this volatile market, because as you've seen in the chart I showed you and the spiders, I mean, we're going up, we're going back down, we're going up, back down. It gets kind of volatile at certain points within the market, and oftentimes traders don't know how to deal with that volatility, and this can result in losses. Well, here's what my mentors taught me. In order to protect yourself in these volatile market conditions, there is a simple two-step process that you must follow, okay? So let's take it step by step. Step number 1, obviously, you have to apply a highly consistent method. That just goes without reason. Most traders have a method and they think, well, Steve, my method's pretty good. And most methods are real good until the market conditions change. Then they all go out the window, right? It's like that old phrase about boxing. You know, everyone has a plan in boxing until they get punched in the head, and then it all goes out the window. It's the same way with trading. Everyone has a plan. It all works when the market is slowly, steadily going up. But the minute the conditions change, the minute the volatility changes, it all goes out the window, and nothing seems to work anymore, right? So what you need is to apply a method that is rooted in consistency, that's able to adapt and can transfer easily onto any market condition. And we have the perfect one for you. It's strategy number 9, okay? This is one of our proprietary methods we have here at Specialist Trading. So let me give you some of the few highlights about this. It's a proprietary pullback method, all right? Now that's a specific type of method, and I'll go into detail in just a few seconds of what a pullback method is. Basically, you want to buy low and sell high, okay? Now, the beauty of strategy number 9 is you can apply it to any market, any time frame, and any direction. So you can go long, you can go short. You can also apply it to option trading. Why? Well, because you are buying low. That means it's perfect for option timing because your premiums will be much less. So you won't have to buy as a stock or an ETF is going higher, and therefore have to pay an arm and a leg not only for the option price but for the premium as well. Okay? Remember, all our students are required to learn the strategy and to paper trade first. We just don't want you jumping in with both feet first, not having studied enough. Our edge here is consistency. Consistency means that you will have losses every once in a while. That's okay. But a consistent method is one that's able to recoup those losses. I'll show you a few examples in just a few seconds where you had a losing trade and then you were able to recoup it as well. All right, so getting a little bit more into detail, I can't give away the strategy rules. I know a lot of you are saying, well, Steve, tell me what is it based off? What are the indicators? What are the patterns? Well, this is an extremely simple strategy. Only has about 3 rules altogether, maybe 4 at the tops. But, you know, it's very simple. And if I gave a couple of them away, you'd probably be able to figure it out. So let me just explain to you. It employs 2 simple indicators, and I'll share with you what one of them is. It's the 50-period moving average, okay? And it's based on their relationship to the price. That's what automatically produces the signals, buy and sell. Now, because it's a pullback method, here's the way pullback methods work. In an overall uptrend, buy signals will be generated during a decline. All right, so we're looking for a sell-off in an overall uptrend. Now, in an overall downtrend, sell signals will be generated during a rally. So in an overall downtrend, we're looking for a little bounce or a little rally. See, we're going counter to what most traders trade. They're usually thinking that it's the beginning of a new trend, okay? So let's look at this, a generic example here. All right, this is a pullback buy example. What usually happens is you have an established uptrend with a pullback buy. And then with all trends, you have a counter trend. That's where it goes in the opposite direction. Most traders at this time say to themselves, well, now we're going lower, so I guess we're in a downtrend now. I should sell everything and go short. But in all actuality, this is just the pullback phase. And this is where pullback traders, depending on the requirements of the strategy, look to buy when everyone is selling. That's why this is perfect for option timing, because when everyone is selling in this little small sell-off, the premiums are a lot less expensive. And you can pick up, either if you're trading stock or options, you can pick up a lot of the issues a lot cheaper, all right? Now, if the pullback method is sound, what will usually happen is that we'll stop and then go right back in the same direction it had originally gone in. Same thing happens with a pullback sell. The initial trend is down. So everyone thinks, okay, we're going lower. And then all of a sudden, it appears that you've made a bottom. This is what tricks most traders. They start to say to themselves, okay, I should get out of my short and go long. Or else people that were waiting on the sidelines, they go to a chat room or go to that webinar or listen to the earnings and say, hey, this is a great buy here. We're starting to go up, so I'm going to buy here at the lows. But in all actuality, if the requirements are all in place, this is not the beginning of an uptrend. This is just the rally or the bounce in an overall downtrend. And if all the requirements are met, this is a sell setup. So what you want to do is sell in this little bounce. And if it works out well, if the requirements are met and you have a sound method, the trend should resume to the downside. Okay, so that's just a little refresher course on pullback trading. So let's look at this example here in UPS. Here's an older example. Let's say, myself included, this is the way I was trained when I first started trading, and I didn't know anything about the specialist edge. When I was learning the same things that most people are taught, I would have said, well, listen, we didn't have chat rooms then, but we had advisors, and we had newsletters, and we had guys on TV. Now, let's say this guy on the TV said this is topped out. It's overbought, okay? And look at, we're making lower lows, so we're in a downtrend here. So we want to sell, or else we don't want to touch this at all, okay? But if you know and have a sound pullback method, such as strategy 9, this did not top out at all. This is not in a downtrend. This is just a pullback. That's just a small counter trend. And this is where you should be actually looking to buy. All right. Now, in our course, once again, strategy number 9, we teach you all the rules. This is not a black box system. This is not something where you just simply click on and see where the buy and sells are. All right. You know exactly what to look for, and we want you to be able to identify them on your own. But in order to check your work, since I'm not going to be able to sit next to you, 24/7 and answer your questions, that's why we developed the platform, because this is basically like your own personal mentor to check your work. All you'd have to do is click on strategy number 9 in the drop-down menu, click on signal arrows, and you'll see you're right. Where you thought there were a couple of buy signals, there are with the green up arrows. And that would be your key to buy if you decided to do so. And look what happened after that. Where everyone thought you had topped out, it was really a buying opportunity. Now, the same thing works to the downside, all right? Most traders, looking at this older chart of United Airlines, would say, well, okay, this is actually a buy scenario, right? Because look, we've got major support. I follow the institutions and the big banks, and they're never wrong, and they're buying right here at these levels. And we're making higher highs, higher lows. So we're in an uptrend, right? So I should jump in before this goes any lower. Before it goes any higher, I should say. Well, that's not really true, because if you study the rules to strategy number 9, you know that this is not the beginning of an uptrend. This is actually a pullback to the upside, meaning that the overall trend is down, and this is just a counter rally. This is not something you should look to buy. This is actually a selling opportunity. Now, once you've taken the course and you've studied all the rules for entry, let's say you say to yourself, wow, I see a number of sell signals here. But just so that you want to make sure you check your work, you click on the strategy number 9 tab, click on signal arrows, and the arrows will appear. And guess what? You're right. You're starting to learn how to properly identify a valid strategy number 9 setup. Now, had you decided to go short, that would have been a great idea, because look what happened to United Airlines, okay? Now, those are older examples for educational purposes. Let's look at that original example I gave you earlier in Apple. Remember, you were a breakout trader, right? Let's say you wanted to buy this on that breakout. Here's the beauty of strategy number 9. We don't have to wait for a breakout, because strategy number 9 is looking to buy at these lower levels, okay? So let's say you think that you've spotted a buy signal. Click on strategy number 9 in the upper green strategy tab. In the drop-down menu, click on signal arrows. And what do you have? You have an up green arrow. So you're right. That is a buy setup. All right. So you have the choice to either buy the calls, buy some type of a spread, or actually buy the stock. It's up to you. Remember, we're not here to tell you that you have to buy this specific spread with an upward bias, or you have to buy this specific call with this expiration date. We don't believe in that. That's what you've got to decide. We're only here to teach you how to identify these high probability setups, okay? So on the 12th of January, a buy signal was generated in Apple, and, well, you had a really nice trade there, right? Okay. But how would you know where to exit? Because at this point, you're kind of flying blind. You're saying to yourself, well, I'm not really sure. Should I hold on? Should I get out? It's a volatile market. What do I do? Because if you held on, guess what? You would have given back all of your profit and you're back to zero again. Okay. So how do we protect our investment? Well, this brings us to step 2. All right. Step 1 was to furnish our students with a sound fundamental strategy. That's strategy number 9. Step 2 is to give you an exit plan, and that's in the form of range extension exit levels, okay? These are a very popular tool for all our students at specialist training. I would say the majority of our students use this in some capacity. I know I use it with my own personal trading, but what exactly are range extension exit levels, okay? Well, if you're not familiar with them, just the standard broad definition is it's a calculated exit method based on price ranges that are automatically generated. So that's the beauty of this. Even though we teach you what this technique is based off of, and you understand and know how to calculate it on your own, well, we've taken the hard work out of it for you once again, because with one click, they're automatically generated on the platform. So let's go back to that chart, all right? Let's say we had just gotten in, and about 3 or 4 days later, we actually have a small loss, but we're not stopped out yet. We're still in the trade. Where do we want to get out with a profit? Click on strategy number 9 tab again, and this time we click on range extension exits. First time we clicked on signal arrows. This time we click on range extension exits, and they automatically appear. You have a total of 4 choices with our exit levels. Now, if you're the type of a trader, because most people would say, well, I don't know how to use this. What does this mean? Well, if you're the type of a trader that likes to get in and out quickly, you don't like to hang around too long, you don't want to be in there for the long haul, you're interested in more getting about a quick profit or maybe just a small win-loss ratio, well, then you would exit at these first levels, level 1 and level 2, okay? As you can see here, you still got a profit, but it's minimal. Now, here's the thing. If you're in a volatile market, we would suggest exiting at level 3 and 4. Why? Because in the volatile markets, you get these huge swings, the way we saw last week and all of these stocks like GME, and all of a sudden they come straight down, right? But you want to take advantage of that big swing. So when you're in a really strong volatile market, you may want to exit at the 4th level right here. Now, had you done that, in just about a week or 2, you would have had a nice 15-point gain. You would have exited the trade entirely, and you would have stood aside when this sell-off happened, and you wouldn't have had any risk at all because you already would have been out, okay? So to see the beauty of applying these 2 simple steps, but how they can protect you in volatile environments, okay? Remember, everything I've just shared with you, everything you just saw, this entire 2-step process is easily accessible on our platform, the BTS Primo charting platform. It auto-generates strategy signals along with range extension exits in advance. So even prior to getting into the trade, into pulling the trigger, you'll know where a valid signal is with one click of your mouse. You'll also know exactly where these range extension exits are. even before you're entering into the trade. All right, so let's look at the strategy number 9, trading process, okay? What I just shared with you. Let's look at some more current charts. Those last charts I showed were mainly for educational purposes only. Let's look at some current charts that happened within the last couple of weeks, maybe the last month. Now, the bias to most of these examples are to the upside because, as you've seen, we've pretty much gone straight up. But I'll share with you a few downside examples as well, a downside market. Okay, as we look at WDC, Western Digital, coming into January, a buy signal was generated. All of a sudden, we click on the extension exits. Now remember, for this volatile market, let's just assume we're exiting at the 4th and final level. Well, look what happened. In less than a week, we've got a nice 5-point gain. Now, I know a lot of you would say, well, Steve, 5 points, I mean, that's not very much. I see other stocks are making hundreds of points. Why am I exiting here? Well, you don't have to. We have other exiting techniques. But in volatile markets, this works very well because look what happens. Many times it gives back everything you just had. So looking back in hindsight, that if you had held on, that 5 points is starting to look pretty good, right? How about this example here in CHKP? We had a cluster of buy signals at the beginning of January, and in about 3 days, exiting at the 4th level, you could have made a quick 7 points. Now the market starts to sell off again, and you're happy because you've sidestepped the sell-off. You're not in the market anymore. But is this the beginning of a downtrend? Well, no. According to strategy number 9, we're still in an overall uptrend, and this is a buying opportunity. On top of that, you think you've noticed another buy signal. In fact, 3 more. So you take advantage of buying some more, and here are the 4 exit levels, all right? So you place your limit order to exit at 137.21, and guess what? In about a week, you made 8 points. So out of these 2 trades coming into February, you could have potentially captured 15 points. And once again, look what happened after that second trade. This is why we say, if you're trading in volatile markets, it may benefit you to exit at level 3 or exit number 4, which we're focusing on today, just exit level number 4. But we always suggest to our students that if you're going to be using these exit levels, especially if you're using exit level number 4, to be out of your position entirely, because this is where oftentimes you will see the trend change. Here's an example on BMRN. All right, a cluster of buy signals was generated. Here are the 4 exit levels. In about a week, you had a quick 7-point gain. That's not a bad little trade here. And then look what happened. You would have given everything back in the next week. CVX, another cluster of buy signals here. This was coming into January. You apply the exit ranges here, and the top one is at 91.80. Since you feel this is volatile, you decide to place a limit there, and in about a week or 2, you reach that. But this is where students get greedy. They say, well, Steve, I did what you taught me to do. I exited at the 4th exit level, but look what happened after that. It kept going higher. So I'm thinking about getting back in because that guy in the chat room really likes this stock, and the earnings are supposed to be really good. That's why it's going up. And I got a little too early. Okay, well, listen, it's up to you. Remember, you're in charge of your own trading destiny. We're just trying to share with you things that have shown to have high levels of consistency in the past. But this is why we say to always get out at the 4th exit level, because had you held on, or even had you gotten back in at a higher price, how well would you have done? Okay. Once again, that 7 points would start to look real good as a profit a couple of weeks later when you not only gave it all back, but you were in the losing column now. Another example here in JBHT, okay, JB Hunt. A buy signal was generated. This was going back to December or so. Here are the 4 exit levels, all right? So you can decide to take this trade. If you wanted to, you could have got long the next day or placed your exit order. And look what happened. In a couple of weeks, you got up there and you made a nice 11-point gain. But the same thing happened. It went higher for another week. Don't get greedy because oftentimes you'll see it give it all back. NXPI, there was a buy signal generated at the end of December. You click on strategy number 9 tab, you click on range extension exits, and there they are. So if you feel there's enough volatility, you would place your limit at 174.53 at the high level to exit. And in about a couple of weeks, you got there with a nice 17-point gain, okay? Went a little bit higher the next day, gapped up higher, but closed lower, and then the gain was completely erased in the next 2 weeks. So looking back, this past week, had you gone long NXPI, you would have said to yourself, wow, thank goodness I took that 17-point gain, because now it's all been erased. This is how you protect your investment in these volatile markets. Remember, you need a sound fundamental strategy. So strategy number 9 is fulfilling that first requirement of having a good strategy that has a high level of consistency. Because what would it matter to protect your investment if your strategy is producing and generating a bunch of losers? There's nothing to protect anyway, because they're not even showing any gains. So you need something that's able to show those gains right off the bat. But then you need to protect yourself with the range extension exits. Okay, a couple of signals in ACM. All right, you have the 4 exit levels there. You decide to place your exit right here. That's where you're going to place your limit order to get out. And you lucked out, because in less than a week, it gapped up tremendously and you had another nice 17-point gain. So you're out of the trade in about 4 days, and look what's happened after that. In mid-January, you've given away about half your profit. As we look at LRCX, all right, another cluster of buy signals. Here are the 4 extension exit levels. You decide to get out here, and 2 or 3 weeks later, you exit with a nice 70-point gain. Now, before you get too cocky and before you get too greedy, because price continued to go higher, remember, in volatile markets, what goes up also can come down. So looking back in hindsight, at the end of January, just this past week, wouldn't you have said, gosh, thank goodness I took that 70-point gain? Sure, I could have maybe made 90 or 100 points, but look at 70 points sure feels good right now, because I would have a losing trade if I still held on. Now, so far we've just showed you up markets, all right, pullbacks to the upside. Let's show you the opposite direction. As we look at this older chart here in Boeing, actually it's not that older, it's only a couple of weeks old, but it looks like it's going up, right? We're making higher lows and higher highs. So most students would say, hey, Steve, this is in an uptrend. The market's going up, I got to buy it, right? You always say to trade in sync with the trend. Well, in the course, we teach you how to define what the overall trend is. And according to the rules and requirements, the overall trend is down in Boeing. And you actually think that you, through your studies, can identify a valid strategy number 9 sell setup. So in order to check your work, click on strategy number 9 tab. In the drop-down menu, click on signal arrows. And guess what? You're right. That is a valid signal. So you have the choice. On the close of that day, you could have gone short, shorting the stock if you wanted to, or buy the puts. Remember, it's your choice. But before you do that, you want to find out where you would be getting out, because you still feel this is volatile. So click on strategy number 9 again. Click on range extensions. And here are your 4 exit levels. Now, remember, if this was a choppy market, we would suggest, only suggesting, it's up to you to decide, exiting at levels 1 and 2. But since this is a volatile market, exit at levels 3 or 4 is suggested as well. But in the end, it's your choice. Regardless of what market condition, you are in charge of your own trading destiny. We're just providing you with the tools, tips, and techniques. So you say to yourself, you know what? I've done my research. I've studied the market conditions. I think this is going to go all the way down to the 4th level. So you place a limit to buy here. And in about a week or so, you've made a nice 18-point gain. You see, trading is simple when you've studied, when you've practiced, and you know exactly how to implement the rules. It's easy, and it's very, very basic. It's very simple. It's not complicated at all. All right, here's another example here in CHTR, Charter Communications. Okay, a sell signal was generated. Here are the 4 exit levels. All right, you decide to get out at the 4th level, and a nice exit. Now, remember what we talked about consistency. If you had placed one of our very tight stops, all right, where you sold, you most likely would have exited somewhere around here, or maybe even here, because it didn't get down to the 4th level yet. So it all depends how you make your decisions. And we furnish our students with upwards of 6 or 7 different stop placements. So it's up to you. Most likely, if you were in this trade and you got down to here, we would suggest at least moving a stop to break even. So on this trade, I believe at the very worst, you pretty much would have just broken even. And that's a lot better than losing money and then watching it go in your favor. Let's look at LMT, limit or Lockheed, I should say. Okay, now here was a setup generated in October coming into November. Here was the signal, here were the 4 exit levels, and in about a week you made a nice 20 points. Now, at this point, you probably got real frustrated because you said to yourself, why did I exit? Boy, I had 20 points. I could have made about 30 or 40. Remember, that's a gambling mentality. Traders just look for opportunities and take advantage of them without any attachment, without any emotion. You're not, here to get upset or whatever. You're just here to be in sync with the market. So a strategy 4 signal wasn't generated, but look what happened after that. All of a sudden, we had a nice bounce. So most traders would look at this and say, well, the market bottomed out. Look at that V bottom there, okay? This is when some news came out. This is a clear case of a bottom. I want to go long, right? According to strategy number 9, we are still in an overall downtrend, and this is just a selling opportunity. It's just a rally. And in fact, look at all the chances you could have got short. Strategy number 9 went crazy. It was not only identifying sell signals, it was screaming to go short. Had you taken advantage of those, here are the 4 levels you could have taken advantage of. Remember, the strategy was screaming, you should sell. This is not a buying opportunity. And look what eventually happened. So the markets are always giving you chances to get back in. There was a nice 50-point gain there, right? Now, let's say you missed those first 2 signals. Well, not to worry, because just a couple of weeks ago, a sell signal, another one was generated right here. And so far, it's still in play. Here's our 4th exit down here. All right, let's look at BABA, okay? Once again, a cluster of sell signals. This is most likely a very strong identification that the market wants to go lower. Here are your exit levels. And 45 points coming into the end of December, beginning of last month, okay? And then look what happened after that. It firmed up and started to go higher. So you see the same principles work whether you're going short or whether you're going long. Even though exiting at level number 4 may not get you the top of the market or the bottom of the market, looking back in hindsight, many times you'll say, boy, I'm just so glad I got out then, because even though I gave a little on the table for the next couple of days or the next week, I left some on the table. Right now, I would have been in the loss column if I stayed into the trade or if I bought more or sold more. So it's always recommended that you exit out of your entire position at the 4th range extension level. Okay, let's review before we go into question and answers. Remember, the first step, you need a valid, highly consistent method. That's strategy number 9. Remember, looking back at some of the highlights, it's a proprietary pullback method. That means in an overall uptrend, we're looking to buy at lower levels. And in an overall downtrend, we're looking to sell at higher levels. So this is perfect if you want to apply this to options, because you'll get some less expensive options. The premiums will be lower, and it'll help you in that aspect. Also, you can apply it to any market, any time frame, in any direction. Okay? Now remember, we require all of our students, if you decide to become a student of mine in the strategy number 9 course, you have to paper trade first. We don't just want you to jump in and start trading, because I can almost guarantee you'll have losses because you really don't fully understand the process. Our edge is consistency. Consistency is an awareness of losses. That means you will have losses from time to time, and that's perfectly okay. But a consistent method is able to recoup those losses, sometimes on the very next setup. So that's step 1. Strategy number 9 fills that requirement. Step 2 is the range extension exits. That's where you can protect yourself in these volatile markets. I just gave you dozens of examples on how they worked in up markets and down markets, show you how powerful they are. Now, the beauty of both of these steps is that they're both included on our platform. As you can see here, the range extensions are a calculated exit method, but it's automatically generated. So everything is one click away on the PTS Primo charting platform. This is the educational platform we designed to really teach you how to trade and to help you protect your investments in any market conditions. So ask yourself, do you think these edges, these 2 steps, can help your trading going into 2021? All right, we're in the first month already. How have you done so far? Okay, I can almost guarantee that the majority of you are not doing as well as you had wanted to originally. All right, we strongly feel that these 2 things can help your trading and increase your levels of consistency tremendously. So because of this, we have a great attendee offer for you today, a great discount. What we're going to do is offer you the strategy number 9 course along with 1 year, 1 full year of our platform. This is worth its weight in gold because 1 year of the platform is close to $1,800 already. Well, that's already going to be included in the price. This is our super pullback and exit levels special. Now, with the 1 year of the platform, you're also going to get a lot of other things as well. Here's what's included. You're going to get the entries, exits, and stop placements, the entire course rules. You'll get add-ons. So if you want to have the add-ons for another platform you're using, such as TradeStation, Metastock, MT4, Sierra Charts, NinjaTrader, we can give you the up and down arrows as well, okay? Now, with the platform, though, that we have, our PTS Primo charting platform, you'll also get a scanner, though. You won't find that on other platforms. You'll be able to scan on a nightly basis. You'll be always able to use anything else that's included on the platform, like our short-term trend identifiers, okay? You'll also get a way to use a powerful tool I developed with Pro Trader Strategies that is our strength of trend tool. It is a great way of determining if a trend is running out of gas or not. That's also included right on our platform, along with the auto-generated buy and sell signals and the range extensions, and many, many, many more techniques that I've accumulated in my 40 years of trading. Now, this also comes with educational correspondence. If forever you have a question or something doesn't make sense, or you're not understanding the process, or maybe you just want to check your work, you'll have my private email address. You can contact me whenever you'd like with questions, and I'll be there in a matter of moments to help you understand. All right, so let's break this down. Normally, strategy number 9, along with a full year of the platform, would cost you over $4,700. Here's the discount, all right? We're not going to charge you that. We're going to discount it up to $29.95. You're going to save upwards of $1,700, okay? So $29.95. Remember, if you just had 1 year of the platform, it would be over $1,700. Well, for both of these, we're discounting it down to $29.95. Here's the best thing about this. Even if that's too much to come up with, we have established payment plans. So if you want to put down a small deposit, you can still be up and running in the course and become a student of mine. So don't worry if you don't have the $29.95 readily available. For a small deposit with a payment plan, you can be up and running ASAP. A year from today, you will have wished you became a member of the Strategy Number 9 course. Why? Because it's so consistent. You just saw current examples of how well it worked, and it also comes with a way to protect yourself with the range extension exits. Here's how to take advantage of this great, great offer, okay? Contact Pro Trader Strategies. I developed the platform with them. They're in charge of all the pricing for my courses, and you can email them, but I would highly recommend calling them directly, because if you have questions about pricing, or if you want to establish that payment plan, they can do that over the phone with you, or they can just give you a number and you can understand what it is and think about it, because they're very flexible, they're willing to work with you, and there's absolutely no obligation, okay? So give them a call at area code 310-598-6677. Now that link you see at the very bottom is the link that will take you to the sign up page and the information page. It's not a live link, but if you look on the chat box and the GoToWebinar column on the right, a live link has just been posted. You can click on that one and we'll open up a browser page for you, okay? Now, I promised you I would answer any questions. So if you happen to have them, go to your question and answer box, type them in, and I'm going to leave this page up here so you can copy down that phone number, and then we will answer any question you have. Okay, question here is, when you said you can apply this to other platforms, what are the major platforms? Okay, well, just off the top of my head, once again, TradeStation. If you have TradeStation, or if you have Metastock, if you have NinjaTrader, even if you have Thinkorswim, there's a way to establish having up and down arrows through NinjaTrader, and to establish what the signals are with those setups for strategy number 9. So you can use that as well. But it's my opinion that, you know, most students are looking at a couple of platforms or a couple of programs simultaneously anyway. So I would suggest, you know, defaulting on the add-ons just for your platform and using our platform, which has so many more things included with it, like I said, the short-term trend identifiers, the automatic range extension exits, the automatic signals, the strength of trend tool, the overall trend indicator, the buy-sell line, 4 different ways to, there's just a number of studies on there that you won't find anywhere else because I've taken them in my 4 decades from the trading floor, and you won't find it anywhere else. So what I would suggest is use the platform for education, for study, and then once you want to enter trade, then use your platform that you regularly use. And you're going to get the platform anyway free for a year, so that's really the way to go, okay? Someone is saying, when you said or educational correspondence, does that just mean email? Yes, it does. But you know, the beauty of that is that we have a lot of students that are around the world in different countries. We also have students in different time zones. So, you know, rather than have a video conference or a phone call, it's difficult to do that because of the time restrictions. You can email me whenever you like. I'm constantly answering emails on the weekend, in all hours of the morning or in the evening. So I usually answer emails in 24 hours at the very latest. Sometimes they're in the next 5 or 10 minutes, depending on my workload. So that's a really good way to stay informed and to always answer any question that you may have, okay? Another question about the payment plans. If I call up Pro Trader Strategies, am I required to purchase? No. Pro Trader Strategies is there to work with you. They're extremely flexible. They know that you may have been a repeat customer. You may already have the platform. They also know you may have another strategy, so they're there to work with you. They're very flexible. And there's absolutely no obligation. So if you're interested in learning and finding out what kind of a payment plan works for you, they would be more than happy to give you an estimate, more than happy to tell you without any obligation. So don't feel uncomfortable. As I stated, they're manning the phones right now, and they would be more than happy to take any questions you have about price or about tech support as well, okay? Remember, their number is 310-598-6677. Okay, if there are no further questions, I just want to toggle over here and have one last look at our disclaimer. And in closing, I hope you learned a little bit something today about having a really sound, fundamental, and highly consistent strategy. And then on top of that, having a very consistent exit method that will take care of you and protect you in these volatile markets. Most especially, I look forward to all of you becoming students of mine in the Strategy Number 9 course. So contact Pro Trader Strategies, take advantage of this deep discount. And in closing, I look forward to seeing all of you in class, and thank you so much for attending. I'll talk to you next time. Bye-bye.